Welcome to Barron's Roundtable, where we get behind the headlines to prepare you for the week ahead. I'm Jack Otter. Coming up, stocks had their worst days since the height of COVID, and the NASDAQ is in a bear market. Should you go bargain hunting? We've got your playbook. But we begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Elizabeth O'Brien, and Al Root. So, Ben, heading into this week, the story was, you know what, I think this is a sell the rumor, buy the news kind of thing. Donald Trump's going to announce these tariffs. They're not going to be as bad as everyone thought, and the market's going to go up. That was a really bad theory.
Oh, it's terrible. I mean, Trump called it Liberation Day. Since then, we've seen it called Hibernation Day, Ruination Day, Obliteration Day. I'm just going to call it a very bad week, the worst since the COVID pandemic, as you pointed out. What really happened here is that, the tariffs have gone from about 2.5% at the end of 2024 to over 20% now. That's a shock to the system. It means it's a tax. It means that the margins for companies are going to get squeezed. They're going to make less money. Consumers are going to have to pay more. There's serious concern about a recession, and the market is taking that very seriously, and it tumbled.
Other than Donald Trump announcing over the weekend, hey, just kidding, we're going to take these down, or I made a deal, or whatever, is there anything else you could see that could turn the market around?
Yeah, I think there are a couple things, but I'm not sure how long they would last. One would be some sort of action from the Fed. Jay Powell did talk today and said that the Fed doesn't plan on cutting rates, but a falling stock market is equivalent to rate hikes. And so he might decide that policy is too tight and cut. And I think that would provide a short-term boost. And the other would be to see something come out of Congress, a tax cut, and not just extending the current ones, but something that actually is a meaningful decline in taxes that would buffer this in some way. So I think those are the 2 things to keep an eye on.
So those are government moves. What are you seeing in the fundamentals of the companies and the stocks?
Well, unfortunately, you're seeing not a lot of good things. The companies that have come out so far, the airlines like Delta, United, American, they've come out and said that they've seen less corporate travel and lower income consumers or flyers not flying as much. And you're also seeing it show up in places like FedEx and Nike to some tariff concerns. And so I think, we really have earnings to start coming up. We're going to have JP Morgan. We'll have Wells Fargo and some other companies coming out, and we're going to be watching more of the guidance. What are they saying about the future than what actually are they going to report? Because earnings estimates right now are still very high. The analysts expect over 10% earnings growth in 2025, and that seems a little too optimistic given everything going on.
Yeah, way optimistic. I do want to move on, but real quick, give me some Ben math. If you have, let's say, no earnings growth this year, what kind of a stock market would you see at the end of the year?
Yeah, I mean, if we have no earnings growth and keep the multiple at 19.5, you get to about 47.50. If we take the multiple down to 18, which is kind of the 5-year average heading into 2019 before COVID kind of inflated it all, you're down at 44. I think we find a bottom someplace in that 44, 4,500 range.
That's down more than 10%.
Yep.
Alrighty. So, Al, tariffs are a very big deal in the auto industry, as you know well. Let's take it from the consumer perspective. Yep. People are wondering, can I buy a car? Should I buy a car real quick?
Usually I say, don't overreact this time. Well, maybe. Car prices are going up. They probably won't go up as fast as some other products. You might see at the grocery store, those turn very fast. Because the dealers already have a couple of months of inventory, and then the automakers, tried to beat the tariffs. Ford and GM actually had very good first quarter sales. That's partly, dealers planning for these sorts of things, but prices are going up. And how they're going to go up, you'll see the incentives, that 0% APR, $1,000 cash back commercial, those are gone. They'll ask the parts companies to try and bear some of this. Volkswagen announced a tariff surcharge, so that's not a price increase, that's a surcharge. But that'll end up impacting people at the dealership. And then there'll be straight price increases. The average price of a car in the U.S. is about $48,000 today. COVID added about $10,000 to that, unbelievably. This sort of tariff regime is adding about $5,000 to that. And again, it'll be a mix of incentives and price increases, but in about a year, you're going to be paying $52,000, $53,000 for the car that you used to pay $48,000 for.
Real quick, take me to stocks. Ford was actually up slightly on Friday.
It doesn't mean it's a buy. You say go out and buy a car, don't go out and buy car stocks. The math doesn't work. Parts imports alone, about $200 billion, 25%, that's $50 billion of cost increases. Ford, GM, Chrysler, parent Stellantis, they're supposed to make $30 billion this year. It doesn't work. What's happening with the car stocks is, the tariffs didn't change this week, but also nobody is just willing to fully believe that this is what's going to be the regime for the next year.
Alrighty, Elizabeth, in case this gets too depressing, should people just go down to the basement and play video games?
Well, there's a complication there too, Jack, because Nintendo on Wednesday previewed its new Switch 2 console. It said pre-orders would begin April 9th. Just 2 days later on Friday, it walked that back. It said we're going to delay pre-orders. It didn't give a new date. The company said it needed more time to evaluate the potential impact of tariffs. Now, this was one of the biggest and most immediate impacts of tariffs we've seen so far. It shows the uncertainty that companies face and their need to sort of pivot on a dime in this environment.
Are your children bummed?
They're not. We're a PlayStation family. My son's like the more violent games.
Yeah, it's
Call
time
of Duty,
for
etc.
shooting things up.
Yeah.
All right, thanks, guys.